You can go live anytime. I'll just kind of speak on and off here. This is the free one, right?
Yeah. We are live.
All right, everybody. Welcome. Happy to see you here. I'm Rob Booker. Nate's running the cameras. Hey, Nate. Thanks so much. I've been thinking a lot about the subject of backtesting lately, and most of you are already familiar with the word, but not necessarily with the process that I use to do it. And a special thanks to Olga, our brand newest lifetime member, for suggesting that we do a little bit of conversation about this. Happy to see you all here. Leave a comment, leave a message. Let me know where you're from. Nate, we'll go ahead and send a prize to somebody today. We'll send you, we like sending out Amazon Echoes because you can listen to the podcast on an Amazon Echo. So let us know where you're from, say hello, leave a kind message for someone else inside of today's presentation. You can do that on Facebook in the comments, you can do that on YouTube in the comments. Don't forget to subscribe to the YouTube channel. We're almost at 10,000 subscribers. It would be really nice to get up to 10,000. If we get up to 10,000, right? When we get up to 10,000, we're going to do a big celebration, which means we're just basically going to give away a bunch of stuff. Okay, we're going to talk about backtesting today, which is the process of identifying. Okay, let me back that up. Backtesting, I almost said it's the process of identifying whether or not your system is profitable, but that's just a bunch of garbage. That's not true at all. That's not even remotely accurate. Backtesting is an activity that will help you gain confidence in your system. Even though all systems are prone to failure eventually, backtesting is the process of gaining confidence in our system. Backtesting, and I'm going to say some stuff that I think is maybe controversial here. You can let me know if you agree or disagree. Anyway, backtesting is widely viewed as something that you do to give yourself an expectancy. That if you do backtesting, that you're going to know what your average profit is, your average loss, and your win percentage and stuff. And I don't really know if that's, I don't necessarily agree with that. I don't think that's necessarily true. I have a hard time believing that any backtesting is really going to be accurate, because you could even go back to 2011 in your backtesting, and your system might show that it makes money. But if you go back to 2008, then your whole system blows up and it's total garbage. So I'm not sure that backtesting a system is all it's cracked up to be. It doesn't mean I don't think you should do it. It just means that I think that there are reasons to do it that are good, that don't necessarily involve you coming away with a bunch of expectations about how well your system is going to perform. Okay, right here on the chart is what I call Knoxville divergence. Many of you are already familiar with this indicator. It's an early warning sign that price will reverse. It's not a guarantee, but it's an early warning sign, and a pretty accurate one, that price is going to reverse. And here we have a stock, Carrefour, and it could be a currency, it could be a stock, it could be a commodity, doesn't matter. I think we should probably look at oil today. We've had a lot of people asking for that. And I could go back in time on my charts, just like you saw me. I could go back in time, and I could look at these red Knoxville divergence lines on my chart, and I could say, okay, those are showing that I should set up a sell trade. So I'm going to write a rule that once I see Knoxville divergence lines, I'm going to draw a trend line, and then I'm going to sell underneath that trend line, and that I'm going to target a previous area of support or resistance. And I try to make my rules, or I try to make rules that are as well defined as possible, documented as possible. So I could document my rules. And then once I have my rules written down, I can stretch back in time, and I could say, oh, okay, well, here's another Knoxville divergence. There it is. And this is a bullish Knoxville divergence, so I'm going to set up a buy trade. I'm going to draw a trend line across price. I'm going to buy it on a break above that trend line. I'm going to set a profit target at a previous area of resistance that's easily identifiable within a few candles back. And then I'm going to keep testing this. Now, a common criticism of everything I just did is that it's not, what would you call it, Nate, if I can see what already happens, if I already know what happens. So it's not like, it's not predictable, it's not valid. That's the answer. That's what people tell me all the time. It's not valid. They say, well, that's stupid. You could already see that that was a profitable trade. That's not a valid way to test because you could see what happens. Well, backtesting isn't about seeing if you could predict the future by going back on the charts. You can always just go back on the charts and see what happened. But what people are saying in that case is, Rob, doesn't that encourage you to fake it, to say, oh, well, that was a profitable trade and I could see, and doesn't that encourage you to sort of like game the system by seeing that this one in particular would be a loss? And you could say, oh, well, I wouldn't draw the trend line there, so I would never take this buy trade. So this is not a loss. And what people are saying is, doesn't this encourage you to be dishonest in your testing? And doesn't this encourage you to fake it like your system is really profitable? And the answer is, if you can't be honest with yourself about whether your system really worked on a historical chart or not, then either you don't have well-documented rules, or you're just a total liar and you're even lying to yourself, which is totally ridiculous. Yeah, right. It's like cheating at solitaire, says Nate. So, no, I'm not worried about that. I'm not worried about that you can see the answers to the test. The first process of backtesting is just to sort of identify on the charts that something does or does not generally work. Now, I'm going to look for oil on the chart here. I'm sure that I've got gold. All right, so we've got some stuff. WTI. That'll do. West Texas Interstellar Oil something. All right, let's just look at a 4-hour chart. There we go. Here we go. Here's some Knoxville divergences. So I might go back on the charts, and I want to go back when I do sort of manual back testing. What I want to do is I want to go back as far as I can go on the charts, and I want to look at least 100 examples of a trade, and I want to follow a documented system. And so I might say, all right, here's Knoxville divergences. Okay, that's awesome. Great, I got some Knoxville divergences. They suggest that I would want to sell. Okay, that's great. So I'm going to draw a trend line underneath those. Okay, that's fine. That's a clear break below the trend line. So there's the sell trade. And then I might put a profit target here. Well, that's the most easily identifiable profit target I can find. And then it eventually does fall to that target, and that's fine. Now, by going back in time, I'm going to see a couple of things. What most people will focus on is, does it win? And they'll go, oh, yeah, that won. Great, I have a profitable trading system. I'm the president of the world. I'm the master of the universe. I'm going to throw myself a party because I'm the greatest ever. And what they'll miss is that they'll miss the pain, or they'll miss the drawdown, DD. They'll miss the drawdown and the pain required in order to get to that profit target. So as you'll notice on this chart, I'm sure some of you have already thought about this, is like, sure, I sold here, but price moved against me. And it's like the, the greatest modern American trading religion is the religion of tight stop losses. That, they burned the witches in the 1500s or 1600s in Salem. They didn't really burn them. I think they stoned them. They stoned them. They got stoned. No, I don't remember. Anyway, that was, the religion encouraged the stoning of witches or the burning of witches. And these days, the greatest modern trading religion, which is just ridiculous, but it's true, that people will get in fights over is this religion of drawdown and stop losses. And it's been propagated by Van K. Tharp and others who I mean, who basically just wrote a bunch of books and now it's just seeped into the, I'm now on a rant, I'm sorry about that. Anyway, that all drawdown, or any time you ever let a loss go against you, you're a total failure. That's what happened. Somehow, between 1990 and today, Tharp and Alexander Elder and other really famous authors propagated this religion of never letting a loss go against you and cutting your losses short and letting your profits run. And it was repeated enough times by enough people with facial hair and bald spots that people started to believe it. That if you dressed in a suit and you said a bunch of stuff that people would have, and you said it often enough, that people would begin to believe you. And that's exactly what happened. That you could never let a loss go against you. And I'm just going to go on, I'm just going to finish my rant and then we'll get back to backtesting. But when you're backtesting, what you will realize is that platitudes and tropes are not trading systems. If you want to run your life by Facebook quotes, you're going to have a really unhappy existence. If you want to run your trading with platitudes and tropes, never let a loss, always cut off a loss, and so you just start, in everything in your life, you cut off every loss that you ever had. Like if your child talks back to you, you just go, you pick your child up and put it in the recycling bin and roll it out to the street and your child is gone. If your spouse offers you some corrective advice, you just file for divorce immediately. If your boss says that maybe you should have done something a little bit differently, that's the worst ever. If you have a bad day, then you just you get in the car and you drive to Las Vegas and you blow all your money. That immediately when anything goes wrong, you just immediately give up is like the worst. That's like the worst advice you could ever be given. That's just not even. It's so bad it doesn't even make it on Oprah. Like it's that bad. Even Oprah realizes that's a terrible piece of advice. And what people will do is they will turn platitudes and tropes into full trading systems, which is ridiculous. I'm going to get a bottle of water here. And so when you so the reason I said all of that, thank you for bearing with me as I went through all that. The reason you go back in time, I'm sorry, I had to drink water. So I'm sorry. So I know that was rude. And whatever else. Thank you, Nate, so much. Okay. The reason that you go back in time is you realize that platitudes and tropes don't really make trading systems, but you start to put pieces of the puzzle together that work for you. So I built this trading system called Trifecta, which looks for these divergences. And so Joe Burridge, one of our lifetime members and a really smart dude, said a lot of these divergences fail. They don't work. Like they don't. You see the divergence and then price goes this way. So he built a reverse Finch or a reverse trifecta system that instead of selling on these signals will buy with a trend on these signals. And he's got a whole robot that's running. He's got a whole system that's running based on this. And instead of just taking what I said as the gospel truth, he questioned me. So doubt and skepticism of these tropes, platitudes, and trading systems propagated by talking heads and windbag blowhard podcasters and YouTubers like myself, doubt and skepticism are the seeds that grow your trading system into something really profitable. But you'd never know it unless you went back and did this, what I call manual backtesting by hand. And this manual backtesting by hand is you come up with a system of rules and you document them. You make a standard operating procedure. Now for lifetime members, if you're a lifetime member here, tomorrow on Wednesday when we have part 5 of Trading as a Business, we're gonna go deep into building standard operating procedures. But anyway, if you're manually backtesting, you document or write a standard operating procedure for how you treat market conditions, and then you move back in time on the charts as far back as you can go, and you spot areas where a trade would exist. Then you walk through the steps of your system and you mark it down. And what you try to do is you try to see how much pain do I have to experience in order to accumulate a profit? How much profit can I go for without getting myself into trouble? How far back in time do I have to go to see a really big failure of this system? Multiple losses in a row, or a long period of drawdown that doesn't lead to a profitable trade. And what you'll find is that all trading systems eventually end up stuck. Well, it doesn't matter. I don't have to draw on the screen anymore. All trading systems eventually end up stuck by one of two problems, and all of them, every single one of them, and there are no exceptions, not with my systems or anybody else's. You'll either have a period, if you're cutting off your losses, you'll have a period of multiple losses in a row that draw down your account balance and even take back most of or all of the profit that you've achieved. Or you will have an open losing trade that will cause your balance to go back down below its starting balance. Cause your account to go back down below its starting balance. All trading systems eventually run into those problems. And you need some kind of a hedge, or you need some kind of method of getting out of those trades, or you need some sort of system that benefits from or actually gets rewarded by having those periods of difficulty. And what I mean by that is let's say that this is the 20th trade in a row that has lost money on this bearish divergence signal. So most traders are now just going to give up on the system. Most traders are going to say, well, that's the most pain I can possibly take. And because this system broke down or had multiple losses in a row or a long period of loss or whatever, it doesn't work anymore, and then they throw away the trading system completely. And what you have is an opportunity, if you see the point in time where your system breaks down, where it has multiple losses in a row, boom, 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 or a trade that opened up way down here, a month ago, and it's been holding on to a sell trade in a really, really long-term loss. You've got to find a way to turn that into, through your manual backtesting, you've got to find a way to turn that into something that doesn't blow your account up, or eventually wins. And so when I teach traders, what I do is I say we should focus on that period of time where things went wrong. And what most people will do is they will highlight all of the times that the system in backtesting looked like it did a great job, and they will gloss over or rationalize or explain away the times where it didn't work. And let's say this is the 20th loss in a row with tight stop losses, or it's a month-long losing sell trade on oil with no stop losses or no manual stop losses. What I would say is, all right, what this shows me is that the system has the potential to get stuck in a trade that can last for a month. So my trade size needs to be very small. And I need to identify in the cycle of this system if there is a point at which, if a trade's been open for 30 days, or 40 days, or 60 days, does it finally have some kind of significant correction? And then if I can find if that's true, I can then turn the worst trades, or the ones that are open the longest with the most amount of loss, I can, for example, say, well, this system, here it is, we're at the 30-day mark, and this sell trade is now statistically and historically the point at which we finally get a pullback, or we finally get a correction. And because I took a really small trade when I started it out, or I took 20 trades in a row with a really small trade size, we're finally at this point 30 days into a trend where I could sell this with a bigger size. Or I would say, I shouldn't have taken any of those sell trades. I should be trading a trend version of this system. And then instead of having 20 losses in a row or 30 days of drawdown, I could have 30 days of trend profit. And so by focusing on the worst that your system does in manual backtesting, you can actually come up with a system that benefits from the worst of your experiences. And you could have one account that trades these counter trend trades and another account that trades with the trend. Or you could throw away the counter trend trading and just look for the really, really big moves and only take the trend trades. But you're only going to find that, and you're only going to find the best that your system can do when you focus your attention on the worst that your system did. To recap what we've said here today, you can only discover the best version of your system when you allow yourself to look at the very worst that it ever did when it underperformed or took a bunch of losses or went into a long-term drawdown. You can only really find true happiness in trading when you focus on where your system did the worst and then you try to tackle that head on instead of putting your head in the sand and ignoring it. Okay, Nate, did we have anybody in particular that was especially awesome today that we would love to give something away to?
Yeah, let's see here.
Seems like a really good use of our time. I mean, if you spent some time with us today, we should definitely reward you. Oh, I haven't caught up on the show Billions. If anybody watched it, please don't spoil it. So that's our setup for today. Don't forget to subscribe to the channel. We're going to make sure that we reward one of our viewers today. Nate, you got somebody?
Yeah, Scott. He's actually he uses your robot and sent you one of those things that you were speaking directly to him today. He has questions, and you even just went there and answered them without even telling you. So.
All right, so Scott's the winner of the Amazon Echo for today. Scott, send us a message on Facebook or reply to any email that we've ever sent to you. And we'd love to hear from you. Don't forget to listen to, it's May 22nd. Don't forget to listen to today's episode of the Traders Podcast on iTunes or Google Play or at traderspodcast.com. We have another special contest with a $200 prize for someone who fits me with a new pair of imaginary glasses. I know that sounds weird, but check that out. Don't forget to subscribe to the YouTube channel or like the Facebook page. Share the video. Let us know where you're from. Leave us a comment below. We'll pick some more winners. We love you all. We're so grateful that you've been here today. Scott, we look forward to hearing from you. Send me an email. Let me know your address, and we'll ship you out on Amazon Echo. We love you all. We'll talk to you soon. Bye for now, everyone.